In this video, I'm going to be talking about the stock market from the very beginner level, and I'm going to go all the way up to advanced in a series of videos. My name is Dean, your go-to guy for building wealth. And what I am going to be doing is building a community on the platform called School. So I'm building the Wealth Builders community on the School platform. If this is something that you would love to be a part of when it comes to building your wealth, I highly recommend you join today. It's free. It's only going to be free for a limited time, and then the price is going to go up. It's going to go up to $7, $27, then $97. So if you want to get access to this program before the price goes up, I suggest you join now. So as I said in this video, we're going to go over the stock market. We're going to start from the very basic level, and I'm going to do a series of videos just teaching about the stock market. The stock market is one of the easiest places that you can start to invest. And if you need cash, it's easy to liquidate or convert in cash, whatever you want to call it. So I'm going to share my screen and show you guys exactly how to do that. Let's take the entire screen. So what is the stock market? The stock market, well, I already told you that. So in this video, I will explain the stock market and break down the myths around it. Have you ever thought the stock market isn't for you? Let's shatter those misconceptions together. The stock market is a path towards financial freedom. First, you need a starting point. Begin with what you have, no matter how small it is. A lot of people think, oh, I don't have enough money to invest in the stock market. I used to think that same way. And I lost out on many opportunities because of my old way of thinking. Now, put yourself in this scenario. There's something that you absolutely love. For me, it was shoes. Whenever a Jordan shoe released, I always found money to buy those shoes. I have like 50 pairs of shoes upstairs. Now, imagine if I took that same principle of just loving shoes and said, hey, let's buy investments. For example, Apple. Apple was about $200 or less when I first learned about the stock market. And because my mind wasn't in that mode of shifting from being a consumer to being a business owner, I said, Apple's too much, but shoes are just enough for me to purchase. But if I took that shoe money and put it into Apple, it would be worth tens of thousands of dollars, maybe even hundreds of thousands. But you gotta unlearn what you know and relearn, or train your mind to think, hey, if I shift this money over here, it will have a future value that I would be rewarded for later. So it's almost like a patience game. Next is education. Education is key. But if you don't execute on the education that you receive, it's just going to fall flat. So learn the basics of the stock market and investing. Learn the first steps. Make your initial investment, even if it's modest. Did you know that you can buy shares in fractions? Yeah. So if you have $5, you can literally buy a company or a fraction of a company on the stock market. So I just use Apple because it's the easiest thing. I think that they made their name Apple because it's the first letter of the alphabet and it's just so easy to remember. Tip of tongue, top of mind. Sorry, that was just yeah. Anyway, so Apple, say it's $100 for that share, but you only have $5. So you can take that $100 share and only buy $5 worth of it. You don't get, if they pay dividends, which is a portion of their profits, you don't receive any of that, but you do get the growth of the stock if it goes up, but it can also go down. One thing that I do want to include, this video is made for educational purposes only. If you are seeking financial advice, reach out to a licensed financial advisor. Next, you have growth. Watch your investments grow over time through smart decisions. Freedom. Achieve financial independence as your investment increases in value. Imagine planting a seed and you just keep watering it every day. You know, like that bonsai tree? That's how you need to think of the stock market. It's slow and steady growth, but when you keep consistently pouring into it, it's going to have an exponential growth that you didn't even realize that could actually happen. I went from having nothing into my account to having $90,000 in like less than 2 years. Now imagine what you could do if you just disciplined yourself to just pour it into your stock market investment portfolio. Ready to embark on a journey that reshapes your financial future? So let's start with some myths and some facts. You need a lot of money to start investing in the stock market. You really don't. You can start with as low as like $5 a day and just keep pouring into your investment account until you have enough to purchase your first stock, or you can buy a fractional piece. The stock market is too complicated for ordinary people to understand. There's so many resources and tools available that anybody can learn the basics of the stock market and investing. There's the books for dummies. There's YouTube. There's Google. Google. It's your best friend. There's so many places that you can go. You can get a mentor to teach you all these things. So don't get discouraged. There's still hope for you. Investing in the stock market is just like gambling. Investing and gambling are two different things. Gambling, you're leaving it up to chance. Investing, you are taking um, structured risk, organized risk, whatever you want to call it. You're not essentially just saying, here's my money, unless somebody said, hey, you should invest in this. Then, yeah, that's pretty much gambling at that point. So, you want to make sure that you have a plan in place. You do your research and have strategies when it comes to investing. The stock market is just for the rich. Imagine it's not actually just for the rich. I want you to imagine the stock market like a grocery store that everybody has access to. So just close your eyes. You're in the grocery store, no frills, blah blahs. Um, what's that other one? I don't remember what it is. But yeah, just imagine yourself being in a grocery store. They have different aisles. The stock market works the exact same way. Shelves of opportunity. The grocery store has different, as I was saying. Um, so how the different there's different aisles in the stock market. It's the same thing, not stock market. There's different aisles in the grocery store. The stock market works the same way. So in the grocery store, you have like your household products, like your detergents, cleaning supplies, whatever it may be. The stock market has the same thing where you'll have technology, for example. Technologies like Apple, Microsoft, like those type of companies would be in that section. You go into like the dairy section, that's all your milk, um, your butter, all your yogurts. Then you have like your utilities sector. So your utilities would be like Enbridge, like your gas, your electricity, all those types of things would be in that category. So there's different sectors. The same way it works like in aisles in the grocery store, your fruits and vegetables, you have your defense sector in the stock market. There's all these different things. There's only about 12 of them, so it's not a lot for you to think of, just like a grocery store. A grocery store only has about 12. Well, Costco's kind of different, but you get the gist of what I'm trying to say here. Pick what you know. It's like choosing your favorite food. You can select companies you're familiar with and believe in your investment. Eggo waffles. I love that brand. I don't get the no name brand. I know Eggo waffles. I know how it tastes. I know the different flavors. Don't go into a category that you don't understand. If you don't understand healthcare and everyone's talking about it, who cares? Block out that noise. You don't need to hear. Like right now, I put my ears right here. I can't really hear anything. One, it's like taking out some of the noise. So that's something that you want to do. You want to make sure you stick to what you know. Too many people invest in just the hype and then they end up losing money. So stick to what you know. Stock prices fluctuate, similar to grocery store prices, changing based on supply and demand. I remember growing up, they used to have like 99 cents pop. Pop is like what, $2 now? Price changes, like it never stays the same. They'll have discounts in the store. You can purchase things as needed or when it's on special. Like, do you ever notice when you go into the grocery store, they have that big display and they're like, on sale, on sale. Stock market is shouting, on sale, but not like in an aisle. Say they call it a recession, or what's worse than a recession is depression. We haven't reached a depression stage in years, but if if the world ever gets to the depression stage, stocks will be on a super deep discount. For those that remember COVID, we had that super deep discount. That was like a special where they're like, "Hey, we're all cheap. Come on, get us while we're hot." It's the exact same thing, just without them actually telling you. It's almost like a scare tactic. Like, no, 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 don't invest in the stock market. Oh my God, recession. No, that's the best time to be like, here's my money. I'll take it. That one. You just gotta fill up your portfolio. Check out. Making a purchase in the stock market means buying shares, aiming for the grow in value over time, just like you would buy groceries to nourish your family. Imagine you have a newborn baby. You're buying formula to feed them so that they can get big and strong. You're buying all the drops that they need so that they don't get sick and they stay healthy. In the stock market, whatever you're buying, just imagine that you're buying little seeds and over time they grow. So if you want to have, say, or buy a plant and watch that plant grow while your investment account grows, that gives you like the physical aspect of your account as it grows over time. Nothing happens overnight. Everything takes time. If you're willing to be patient, you will make a lot of money in the stock market. The name of the game is patience always pays. But how do you pick the right stock? And that's what we'll explore next. Picking the right stock involves a few things. So analyze fundamentals. Fundamentals is learning to examine the company's health, their revenue, their profits, and their growth aspects. If you want to know more about these fundamentals, and I deep dive more into this in the Wealth Builders Academy. So if you're interested in learning more about the stock market and join a community where we hold each other accountable, the Wealth Builders community is the place that you want to be. It's a community, but it's called the Academy. So it's the Wealth Builders Academy. And I left the link down below in the description. So click today to join. It's free, but only for a limited time. And then the price is going to go up to $7. It's still cheap. It's cheaper than a Netflix subscription, but more valuable than a Mercedes. Next, you have market conditions. So with the market conditions, you have to understand how economics and trends and sector trends can impact the stock price. Economics is pretty much the world, how the world is being, or how the world can impact a stock. For example, you have gas stations or price of gas is going up. That would affect some of the sectors. So that would affect, I think it's Chevron, the gas company. If gas prices go up, their stock prices will go up. What if gas prices going down, their stock price will go down. And it also affects like countries as well because they produce oil. So then that country wouldn't be doing as well, which in turn would be reflected in the stock market. Risk evaluation. So you want to assess the level of your risk you're you're comfortable with based on your financial knowledge. So right now, some of you are at the very beginning. You have no clue about the stock market, investing, your financial risk, whatever it is. That's okay. Over time, you will understand and learn what your financial risk is. But a rule of thumb is only invest 10% of your net worth. So if you don't know what your net worth is, again, you can go down to click the link down below, join the Wealth Builders Academy to get a net worth statement sheet to fill out to know what your net worth is. If you believe knowledge is power, then type yes in the comments. Transforming, for me, I was able to transform stocks into $84,000 cash. In 2023, I was able to cash out $84,000 out of my portfolio. Stocks are the easiest way to turn. Stocks are easy to cash out and convert into cash. I didn't write that right, but I'm just going based off what I wrote. I had an emergency and I needed to cash out I needed a large lump sum of money. The bank wouldn't give me that money in time. I didn't have anybody around that I could ask for that type of money. But luckily, I had my stock market account. So I cashed that out and I was able to convert that into cash within a couple of days. That's why I love the stock market so much. And this is why I want to get you guys involved as well. But I'm starting at the basics and then working my way up. So if you're looking for more advanced a level for investing in the stock market, I just want to plug it again, but the Wealth Builders Academy has all that for you, and it's free for a limited time. So if you want access to all this information and strategies that I have used in the past, click down the link, click down in the link below, or click the link down in the comments below or description. So what is the first step that I took to be able to do that? Keep watching the series to find out. So the first thing is common fears with the stock market, or common fears people have with the stock market. The fear of loss. Understanding the stock market fluctuates. It's normal. It fear of loss. Understanding market fluctuations are normal. Diversify your portfolio, spread your risk. Nothing can go up forever except your fart. It just goes up. But in all serious, the stock market goes up and down like a roller coaster. That's how you have to view the roller coaster. It never can just continuously go up. Imagine going to Six Flags or Canada's Wonderland, Disneyland. The ride first goes up, and that's like the fun time. It's like you're getting excited, like you're going to the tops. And then guess what? The climax happens, and then with the climax in the stock market, people see that as a bad thing because they're like, oh my God, my portfolio went down. No, oh my God, it's on sale. I can buy more. Even if you bought at a high price, there's different strategies that you can do to lower your price while being an owner of the stocks. Overwhelmed by complexity, start with the basics. There's many places that you can start where they take it, like here, step by step as to what the stock market is, like the history of the stock market, companies that are publicly traded, how to read the stock market, all that stuff. Resources used to design, there's resources designed for beginners. So anywhere you're looking at beginners, you'll find it, like this video here. Fear of timing. Remember, long-term investing often outweighs timing in the market. Start small, think and think. There's a term that you will start to hear, but like don't call the tops, don't call the bottoms. It's like going back to gambling. It's or even gambling, horse racing. You're trying to pick a winner. You're trying to say, all right, this is where it's gonna be, or it's gonna be down here, and that's when I'm gonna buy, or that's when I'm gonna sell, and that's when I'm gonna buy. It doesn't work that way. You have to be willing to choose an entry point as to where you're going to get in for the stock market. Don't try to say, all right, I'm going to buy it when it's at this price or sell when it gets to a certain price. No, it doesn't work that way. Worry over making mistakes. A lot of people think, oh my God, I'm going to make the wrong choice. I suck at this, blah, blah, blah. If you keep throwing negative trash into your head, guess what? You're just going to have a landfill and your mind's not going to be right. So forget about all the things that you think and look at whatever mistakes that you're going to or will make in the future as lessons to make you a better investor later. In our next video, we'll dismantle the fears one by one. So if you're looking to get over these fears, I have a next video that you can watch next. I'll link it up here for you to watch next. The first step to investing, set clear goals. Decide what you want, achieving through financial investing and retiring. So that's retirement or buying a home. Hi, Charlotte. Here, go in the room with mommy and play with this. Your kids game, whatever that thing is that your teacher gave you. Next, educate yourself. Learn the basics about stocks, bonds, and other investment types. Choose a broker. Research and select a brokerage firm that suits your needs. Don't just pick something because everybody's using it. Find what is best suited for you. There's a lot of beginner stages that you can use or beginner platforms that you can use that's super simple that a child can do it. For example, like Robinhood, Wealthsimple, those are like very low barrier to entry for you to get started. I'll leave my Wealthsimple down in the description for those that need to join. Also, for the more advanced, I will leave the platform that I use that's called Interactive Brokers that you guys can also join to use as well. Start small. Begin investing with an amount you're comfortable with, even if it's small. If it's $5, just put in $5. It will hit different when you put that $5 in and you're actually investing it. It's like you getting on the bike for the very first time. Oh my God, I want a bike. I want a bike. You get on the bike and then you fall. You get on the bike, you fall. You get on the bike, you you got a bit of balance. Think of yourself as riding a bike in a stock market. It's the exact same concept. Diversify, spread your investments across different assets to manage risk. So stocks, bonds, real estate, mutual funds. Stocks, real estate, you know about. If you don't know about real estate, you can learn YouTube. Also, I'll have a class on real estate. So again, shameless plug, Wealth Builders Academy down in the description. Stocks you're learning about right now. Bonds is it works just like stocks, but it's more so you're lending money to either companies or the government. That's how bonds work. And then you have mutual funds. Mutual funds is me, Bob, Sue, Rob, Tom, Jackie, all coming together, pooling our money to buy stocks through a bank in an investment pool. So that's what a mutual fund is. Can you see yourself doing this? If you can see yourself doing this, I want you to just shout, "Yes, I can do it." So click the description to join the Wealth Builders Academy. It's free. Yes, I know I keep plugging it, but I'm trying to build a community here. And the way you build a community is getting like-minded people together. So if you're somebody that is interested in stock market, I strongly encourage you to join the Wealth Builders Academy. It's free. What do you have to lose by joining a free community? You have absolutely nothing to lose. You only have something to gain. So building our portfolio. Start with these simple strategies. Diversify your investment. So mix different types of stocks, bonds to spread your risk. Stocks and bonds don't really move in the same direction all the time because you're lending money to the governments and companies. Stocks, you're investing in the actual companies. So they kind of like work in opposite directions of each other. But it's good to have both because when one is up or when one is down, the other is up, and vice versa. You don't make as much money in bonds, but it's enough to mitigate your risk. So when I say mitigate, to reduce your risk. Start investing with what you know. Invest in industries or company you're familiar with as a beginner. If you're part of the Wealth Builders Academy and you're watching this, it's in the course, you'll have a sheet that actually helps you identify companies that you didn't know existed to help you create a list of companies that you potentially want to invest in. So if you want access to that sheet, it's in the Wealth Builders Academy course, which is also free. Use index funds. It's a simple way to invest in a broad market segment or the whole market in general. Index funds. So imagine this: you have I thought of something and what's it called? Okay, imagine you have the grocery store. The grocery store has different sections or different categories within the grocery store. But instead of buying one section or one individual product in the grocery store, you're buying the whole grocery store. So you're taking on very little risk because you have um, all these different sectors and products within the grocery store. I'll go deeper into each of these points and more sophisticated strategies in the next video, guiding you through each step in a stronger and more diverse portfolio. Ever wondered what mixing the right Ever wondered what mixing the right mixture in your investments can do? Understanding risk. So I just want to show you guys something here. This is a portfolio years ago, or a bunch of portfolios. Just to show you guys, some are not doing so well, but that's fine. But overall, my gain is 21,000. So here, this one I started back. I want to say no, wrong one. Oh, I started this portfolio back in I want to say 2008 or maybe 2014. My idiot proof first. I read this one book and it completely changed the way I looked at this market. Look at this total gain, 62% of $13,000. And all these companies, $1,000 to start with. Some of them don't exist anymore. But look at this. Over time, I only have one, doing bad. 5, 6 out of like 50 companies that's like doing bad. But the good actually outweighs the bad. So that's whatever. So back to the video. So understanding your risk. Risk in investing is like deciding how fast you want to go on your bike. Going down a hill, going up a hill. Well, going up a hill, you're not really going fast. Or it could just be going straight. Some people are okay with going really fast because they enjoy the thrill, even if they might fall. Others prefer to go slow and steady, enjoying the ride without worrying. Imagine a bike you have to pedal on versus a motorbike versus a motorcycle. Depending on how fast you are, all three are risky, but a motorcycle is the most riskiest. A bike with a motor on it is less risky, and then a bike is not as risky. And I'm talking about in terms of you going pedaling, going fast, or using the motorbike. Yeah, but you understand what I'm trying to get at, right? So depending on where you want, which type of bike you want to be on, that's understanding what your risk is. If you're not somebody that's a heavy risk taker, don't invest in stocks that go up and down a lot in the stock market. So if you don't like roller coasters and being on like the wild beast at Canada's Wonderland, stick to the little teacup rides that you're okay with. That will allow you to sleep at night. Oops, I'm hungry. So understanding. So manage risk, meaning choosing the speed you're happy with. You can wear protective gear, so that's like diversifying your portfolio, or choose the path, or choose safer paths. So invest in stable or less risky options based on what makes you feel comfortable and safe to ride on. Are you willing to learn how to manage risk? If so, make sure you hit the subscribe button for more videos like this. If yes, I want you to shout it out loud. Yes, I'm ready. To start investing, set a budget. If you don't have a budget, I strongly suggest you start budgeting today. If you do not have an idea of how to budget or want help with budgeting, I have a budget sheet that you can get in the Wealth Builders Academy. Once again, the Wealth Builders Academy is free. So just click down in the link or click down in the description the link to join the Wealth Builders Academy for free. So decide how much you want to invest without impacting your daily life. So remember what I said going back to using the net worth statement, 10% of your net worth. Open an investment account. Choose a brokerage or investment app to create an account. So I'll leave in the description. You can use Wealthsimple or Interactive Brokers. I will be making videos on how you can start in these on these two platforms within the Wealth Builders community. So if you want to access that, join the Wealth Builders community, and I'll give you step-by-step instructions on how to open up an account for both of these platforms. Learn the basics. Spend a little time each day learning about the stock market. If you type stock market for beginners or keep watching this series of videos, you will learn about the stock market bit by bit, and I'll walk you through the steps. From looking at those weird charts where you see all those and the colors, I'll teach you all that stuff. Start small. Buy shares from companies you know. Consider index funds to start. So remember, the whole grocery store, or you can buy the individual products within the grocery store. Plan for long term. Focus on building your portfolio gradually and not getting rich quick. If you're trying to get rich quick, then just log off this video, watch something else, find something that will get you rich quick, but it's definitely not here. I'm here to help you build long term wealth, sustainable wealth. When I say that, that means money in your account that you don't have to worry about going to work. In the next video, I'll turn these steps into a dance of numbers for your success. Some common pitfalls in learning about the stock market often include overwhelming information, complex jargon, unrealistic expectations of quick profits. All this I went through in my journey about learning about the stock market. It's a rabbit hole of information when learning about the stock market. There's so many different opinions, there's so many different ways to look at the stock market. You just have to stick with um, one category of information that sets well with you. Don't listen to everything that everybody puts out there, because when you start listening to everybody, you're just gonna have analysis paralysis and not end up executing. Complex jargon. They have a lot of words that many of us don't understand, but if you take time to find out what these words mean, you can use Investorpedia, I think it's called, that will give you breakdowns of all definitions in very simple layman's terms. Realistic expectations. Don't think that you're going to get rich overnight. Take your time and you will see your profits over a long horizon. My approach simplifies the complex into digestible, relatable examples, like comparing the stock market to a grocery store, making it easier for you to understand. I want you to affirm yourself daily. I choose to learn from the best. That's what I want you to say on a daily basis. I am capable. I am worthy of riches. I am abundant in wealth. Whatever it may be, you just need to say that day in and day out to train your mind on what it is that you really want. Lessons, not losses. Every investment didn't go as planned. Every investment that didn't go as planned is a stepping stone towards becoming a savvy investor. These experiences teach us the value lessons on risk, market dynamics, and sorry, dyslexia is kicking in right now. These experience teaches us value lessons on risk, market dynamics, and the importance of research. Research, research, research. The more you research, read, search, or listen, the more you'll know. By understanding what went wrong and why can refine your investment strategies, making better choices in the future. With these, view these as not as losses, but as tuition paid for financial education. We've been trained to see losses, failures as like that's the end all be all. No, but there's that song by Aaliyah. If first you don't succeed, dust yourself off and try again. These are not, it's only a loss, it's only a failure if you give up. But if you go back to see what happened, you will get better. Think of yourself as a scientist. Scientists don't give up the first time that they're not successful. They keep going and going until they get a solution. All problems are solvable. You just need to keep working at it. When the time comes to happen, who knows? But if you keep at it, you will find a solution. Imagine turning every lesson into a stepping stone of success. I've seen this picture on Instagram where it was a guy. He was holding all his failures like this above his head, and then the other picture was showing his failures as stairs, and he could just kept getting higher and higher and higher. So now imagine what you could do if you put your mind to something like that. Think about having enough money saved up from smart investing to do cool stuff like traveling, buying things that you've always wanted, or helping out friends or family members. Some of you don't want to help out friends or family members. Maybe it's you want to donate money. You notice these people that have a lot of money in the stock market, they donate a lot. What are you going to do with all this money? It's better to give than to receive. Investing wisely now means that you could have a future where you don't have to worry much about money and you can enjoy life more. What if I told you the time to achieve this could be shorter than you think? Ready to start, ready to transform your financial future? Join the Wealth Builders Academy to start your journey to becoming a savvy investor today. It's free for a limited time. Are you ready to be a wealth builder? Confirm by clicking the link below and signing up. You can watch the next video on stock selection that I have linked up here, which ones to buy, when, how, all of the answers await for you in this video next.